While the Fed has not yet announced plans to taper its asset purchases, the economy appears to be entering a new era for the Federal Reserve, and it raises some key questions across all asset classes. Did the Fed miss the chance to find an out? Dan Collins, a 25-year veteran of the futures industry and founder of the Dan Collins Report, joins me from the floor of the CME to try and make some sense of this. So Dan, tell us, do you think the Fed delayed the decision, and what asset classes are you focusing on the most?
Well, I think you have to, focus on the bonds and stocks, and that's what's reacted most, severely to the Fed's what they're doing, what they're not doing, and kind of expectations on when they will taper.
Well, you wrote a very interesting piece today on the Dan Collins Report and DanCollinsReport.com, and you gave some reasons as to why you think they delayed, and do you think that they made the right decision?
Well, that was actually Blue Putnam, who's the economist for the CME, who spoke at an event yesterday. Very interesting stuff. One of the things I asked him is there a chance that they would re-up Bernanke? Because I always thought that, he's kind of a mad scientist with the quantitative easing. We've been at zero interest rates since '08. So I thought, he said there was a small chance that it could happen, maybe 5%. But
right.
I think the key point of what he's saying is that, the fact that they're tapering, we had that burst of activity in May when Bernanke first, hinted that it might happen. I wrote at the time that the stock market kind of had a temper tantrum like a little kid because its candy was being taken away. And then it kind of moderated it, knowing that it's not going to be all at once, and they're not going to raise interest rates still for several years. So I think his overall point is that the taper is built into the markets right now.
So what are traders thinking on the floor down there? Doesn't the Fed get that everything that they said in May and June, it does matter? What they said yesterday in the minutes absolutely does matter. And now we're turning our attention over to October. What are we doing here? Are we hedging? Are we continuing to buy and drink the Fed Kool-Aid? What are traders thinking?
Well, they like it to end, I think. I think what everyone's looking forward to is for to a regular market, so that market moves are judged on the fundamentals of the markets and not what the Fed might do. And that was a positive part about the tapering talk, is that that's going to happen at some point. Now, it didn't happen because the market kind of, reacted the way it did. It's calmed down a little bit. I think the problem is that we've had this slow, steady recovery that every time it looks like it's building steam to say, yes, we've arrived, then the numbers go bad again. And I think the last thing the Fed wants to do is to taper, like if they tapered at this meeting and then have really bad news come in and have to add back the full $85 billion. So when they start, I think they've committed to starting before the end of the year. And if the numbers aren't great, it's just going to be a very small reduction in their purchases.
Okay, great. Thanks, Dan. We'll have to catch up with you again in October. Again, follow Dan on the DanCollinsReport.com.
For more of Jill Malandrino's plays for trading spikes in market activity, visit optionsprofits.com.